Hello and welcome to Investing Confidential. At the end of this video, I know I'm usually kind of negative, but I'm gonna give you some really good buying opportunities. Okay, some places where you need to be allocating your money. Some interesting opportunities have arisen because again, volatility creates opportunity. So stay tuned at the end. You're gonna have some. Finally, I'm gonna give you some stuff to really look at. Maybe not to buy tomorrow on Monday, but it's something to take a look at. So it's Friday, February 4th. Friday, April 4th. It's a bloodbath officially. Disaster. But not unexpected for those who have been, for the few loyal followers. It's not unexpected. So you've wiped out, I don't know, 7, 8 months of returns. So if you invested 7, 8 months ago, you're back to square zero. Those who didn't invest in the stock market, especially the S&P 500 index and all of those Mag 7, and stayed with the stuff I talked to you about, non-dollar, small caps, gold, you're doing pretty well. Okay, so let's just see look, here it is. This is yesterday. This is from yesterday. So you add in today, so you had two days equal 10% down. Again, COVID, right? The last time we had COVID. Now, COVID, as I always said, is an inflection point, just like the election is an inflection point. So when you start talking about stuff that happened in COVID, things start to get interesting. This is a falling knife, okay? You probably don't want to catch it, but you have to, when things start correlating to COVID 2020, things get interesting, right? On a short-term basis, only a short-term basis, you're probably going to get a bounce in the next Monday, Tuesday, Wednesday, probably a strong bounce, but that's all it's going to be. It's a trading bounce. But again, COVID, okay? When you start hearing COVID, that's when you start to pay attention. So, everyone's asking why is the market going down? And I've been talking about this for the last, I don't know, few months, and it comes down to this. Now it's being published, but those of you followed me, look, it's about corporate profits. It's very simple. Now, McKinsey is a joke. Okay, I hope McKinsey really suffers because they have all these contracts in government. I hope McKinsey is part of the problem with corporate America, folks. But they did point out here that it's all about profit. It's all about earnings. Okay, why are all these stocks getting killed? Well, because the realization is when they reshore, okay, they're, look, the average wage in China and now in Vietnam's getting a lot of press. Vietnam pays around $200 to $300 per month, folks. That's the wage in Vietnam. China's a little higher. But imagine trying to pay a worker here in this country $200 a month. It doesn't work. It doesn't work. So if you take the job back here, guess what? $200. That's a day. So what's that going to do to profits? It's going to crush your profits. Now, 90% of the people in this country, if you said, hey, Apple, Nike, Lululemon, all these companies that are in the paper, instead of making, $1 billion, they're going to make 700 million. Do you feel bad for them? No. Do you care? No. Because you don't own stock. You don't. You guys watching, obviously, are in the markets, but the average Joe, the average American doesn't have that much exposure to stocks in a short to medium term basis. Maybe you got your pension fund long-term 401k. Okay, you hold on to that in the 10 years it'll recover. But bottom line is, who cares? Who cares if Apple's profits are 20% lower, Honeywell's profits are 10% lower, Nike's profits are 40% lower? Folks, they're going to still earn billions. Billions. Okay, so don't cry for me, Argentina. Okay, I don't care. I don't want to hear it. But that's the bottom line. And so what's also driving it? Okay, here, very simple. You've got consumer expectations for their financial situation, right? Now, rightly so. You're seeing the markets blow up, all this kind of stuff. There are people now trying to sell their house in other parts of the country outside of the New York metropolitan area, and there's no bids. Houses sitting on the market for months, no bids. So all of a sudden, you're concerned. Okay, you're hearing about the layoffs in the government. You're hearing about companies laying people off, and this drives consumer purchasing. If you believe your financial situation is going to be horrific, I mean, look at this number. This is worse than the expectation of the financial situation, household income. It's worse than the financial crisis. Okay, folks, we're in a recession. Any YouTuber who tells you there's no recession, shut off and unlike the person, unfollow the person right now. Any moron, and I know that there's a few out there that are telling you there's no recession coming. And there are some out there saying it. There's some of the government saying it. Unfollow, turn it off. They're fools, morons. Okay? This is the only chart that matters. People are concerned about their financial situation as bad as any time in history. Okay? In history. And so what happens? I'll show you what happens. Here's a direct result. Want to see? Here we go. Airline passengers. Not flying anymore, folks. Now, the interesting thing is, you obviously, we've all heard about these airline near misses. And they're saying there's too much traffic in the air. No, you know what there is? There's too many private planes, folks. Again, going back to this idea of Wall Street versus Main Street. The Wall Street, the financial economy, everyone's in a private plane. People are, and that's why air traffic control is out of control. It's not because of airlines, American Airlines, United. No, nobody's flying. Okay? They're getting pummeled. The only thing saving them is the lower oil price. It's private aircraft. I don't want to get on a tangent. But again, Wall Street versus Main Street. Main Street's cutting back, not flying. Guess what Wall Street's doing? They're just flying all over the place. And guess what? Causing disruptions at the airports. So when you hear about this stuff, about the airports, and now there's Reagan National, and we got problems at Chicago O'Hare. Folks, this is private aircraft. These are billionaires. These are people making $100 million. And you're going to see that fall off a cliff because guess what? That's all tied to the S&P 500. All of that shit. Excuse my French. Just pisses me off. So, again, people are pulling back. Recession. Baked in. It's here. I don't care what the numbers tell you, but we've as you know, and I said in the last video, we've been in recession for years. Okay, Wall Street hasn't, the elite class hasn't, but most of America has. And again, I want to repeat this. I mean, this is what it's all about here, folks. The tariffs sideshow. It's the dollar. Why the Trump administration realizes they got some smart guys that know about emerging markets. If you know about financial history, if you understand financial history, one of the ways to get out of your debt situation is to devalue your currency. We have a I don't know, $7.5 trillion in debt, 2 trillion $2 trillion deficit. Okay, we spend $7 trillion, we only bring in what, 5? So there's a $2 trillion deficit. And we have 36 trillion in debt. And one of the ways to alleviate that is to devalue your currency. And those like myself who've invested in Brazil and most of Latin America and Eastern Europe and Russia have gone through these big devaluations. What does it do? This is the IMF program. It helps you alleviate your debt situation. So guess what? There are some people whispering in the air, say, hey, we need to deflate. We need to weaken our currency. So 2 ways. Get the currency weaker by just throwing out People are not confident anymore. So they're selling our dollar. That's benefiting. Believe it or not, that's benefiting the US in its debt situation. So watch the dollar. The dollar index is getting crushed. It's a falling knife. It's got to go lower, just like the oil price. Trump told you his target, 50. That's where it's going. Where is this dollar index going? Significantly lower. That's positive for the US, the Treasury, the debt situation. Nobody is going to say that. I'm telling you that. I'm telling you that. Because people like myself, and there are a lot of others out there who have seen this in other countries, know that this is a program. It's the IMF program. So there's a danger to that, right? So this is historical. Foreigners have been buying up our stock market for a very long time. Very, very long time. This little dip here between, let's know, 95 and 2000, that's when they had all this currency devaluations, the Asia financial crisis, all that. But we've had just a massive increase in foreigners buying our stock market. But if you want to know who's been the big seller and why there's been literally, as you can see, panic selling, it's this. It's the foreigners. So what we saw today on Friday and yesterday, indiscriminate selling. U.S. individuals, they're buying, trying to buy the dip. They're getting pounded. Why? Any strength, the foreigners are bailing out. They see the dollar. You don't see it. They see it. They want out. They want out. It's that simple. So you got to watch the dollar, folks. If you're trying to bottom fish this market, you're not watching the dollar index, you're a fool. And another thing that's not going to bail out the U.S. is the Fed. And here's why. Again, the betting markets, much better than the U.S. fake numbers that come out every day. They're just completely fake. But here, betting markets, inflation, 3.5%. I'll take this forecast over any Wall Street strategist because they're a bunch of morons. I don't care about Wall Street. And so, but Wall Street's saying oh, look, Fed funds pricing in 2 rate cuts. Folks, if the betting markets are right, and they are, and we're heading back up again, Powell and his friends, Powell, remember, only cares about his legacy. He made a policy error last year. Totally. Like the last time in the 70s, the moron made a policy error, and it's going to cost him. So he's not cutting. So this Fed funds, this is Wall Street expectations, ain't happening. I believe the betting markets. I don't believe Wall Street. The betting markets. And think about, these are numbers that were hidden over the last couple of days, completely hidden because of politics, partisanship, all this. But look what happened in March, folks. Hiring. Again, with all the talk of layoffs, government layoffs, this and that, look at March. Look at March. 228,000 new jobs. This got no press. This is what you have to watch, because if Trump and this strategy works, what you're going to see is continued negative economic numbers, but better job numbers. And that's what he wants, because that helps, again, Main Street versus Wall Street. This is a good number for Main Street. Again, this confirms it. Jobless claims still extremely low. Extremely low. You would have thought this would, like, oh my God, Tariff, the Doge, they're cutting, firing people. Everyone's firing people. Low expectations. We think it's jobless. Now these claims may go up. I don't know, but right now, looks pretty good. But things could change. So let's now focus on the opportunities. Okay, as I mentioned to you. So let's look at the tariffs, and this is going to dictate where the opportunities are. So these reciprocal tariffs, which were announced Monday, Tuesday, whenever, I don't remember. Was it Wednesday? Whatever this day of reckoning, whatever the hell it's called. It was mostly Asia. Mostly Asia. Why? I don't really know that much, but mostly Asia. And these countries here are some of the lowest wage countries in the world. As I mentioned to you, Vietnam, $200 a month. Cambodia is probably lower, $100 a month. Bangladesh, they probably pay $3 a month. So Asia is not doing too well. But where do we see opportunities? Let's look. Look at this heat map here, kind of. You got the darker means the problems, right? So Europe, you got parts of Africa. Look at Asia. But look what's light. Look at to the left. Look at Latin America, folks. Look at Latin America. Look at Australia, Latin America. Except for Venezuela, the rest of Latin America, I would say, is tariff light. Okay? I'm going to keep talking about Latin America until you guys start allocating to it. Because I've been telling you to allocate to it. Argentina, Brazil, Mexico. I'm going to keep telling you. But here it is. Here it is. You don't want to be where it's dark, but you want to be where it's light, right? Meaning lighter tariffs. So Latin America looks very interesting. I mean, and overall, this is really cool. Overall, emerging markets, again, non-dollar things along with commodities. Look at this. So you got earnings growth here. Expectation for earnings growth. On the left is MSE IFA's Europe, looks terrible. S&P 12%. Look at emerging markets, including China, by the way, which is surprising. But this big earnings growth expectation, that's bullish for stocks. Look at the multiples. U.S. expensive, Europe expensive. Look at emerging markets. Out to 26, 10 times. Very cheap. And you get paid for it. Look at dividends. Now, Europe pays dividends. Look at the U.S. Very low dividends. Look at emerging markets. Very high dividends. So you got superior earnings growth, cheap multiples, and strong dividends. That, to me, folks, is a recipe. I want to invest in that. I want to invest in that. There's your opportunities, folks, in emerging markets. And I'll just give you, look, I'm not telling you to buy Brazil today because Brazil's got serious political situation with Bolsonaro and Lula. Lula, by the way, is like Biden. He's out. He's 82 years old. He hit his head about a month ago. He's gone mentally, which is a good thing because he's a real thief. And those of you who have put comments about Lula, positive Lula, don't even bother. Just unsubscribe. Get out of my feed. These guy's a crook. And he's a bad person, and he's now senile, so gone. So Brazil's got some, but this is Brazil relative to the U.S. Okay, going back, look back in that chart. This is about 2000, 2003. I got to tell you, I was obviously investing heavily in Brazil. Around those times, that was what they call that was one of the greatest buying opportunities in my lifetime in any kind of asset. Buying Brazil in 2002, 2003, 2004, even in 2005. Maybe the greatest move I've seen, I've been a part of in my lifetime. It's just amazing. You made a fortune. Investors made a fortune. And we're back. Timing with the politics, I don't know, but looks very interesting. And I don't like to when people start when the mainstream news starts talking about it, but even the mainstream, the Wall Street Journal, looking at Brazil looks like a winner. It does. Okay, Latin America overhaul, and then just keep talking about other things: metals and mining, hard commodities. This is a little bit difficult to understand, but this is an earnings revision ratio. So what you want to see, obviously, is a difference between downgrades of revisions and upgrades, or upward revisions versus down revisions. You want to see, obviously, things going up. But we're at a turning point here, folks. I really believe we're at a turning point for our earnings in the metals and mining sector because of what we discussed. And there's a lot of the large metals and mining companies have exposure here in the US or Canada or Latin America. Because, folks, this is what it's all about. You could like Trump or don't like Trump. It doesn't matter. He's creating a Western Hemisphere, North, South America, including Canada, no matter what the rhetoric says. This is, if we isolated this entire Western Hemisphere, if we isolate it, put a cone of silence around it, we have, again, we meaning U.S., Latin America, Canada, largest freshwater reserves in the world, the largest oil reserves in the world, the largest metals reserves in the world, yes, larger than Africa and anywhere else by far, and the largest consumer, over 1 billion people consuming, big consumers, above average consumers. So the isolationist aspect of it, don't like isolationism, but it kind of makes sense. Anyway, long story short, U.S. metals and mining companies, this is the place to be. Very, very interesting. They're extremely cheap, and their earnings revisions about to go higher. Another good opportunity. And I'm just showing this because the next one's going to be kind of shocking, because I don't normally talk about specific stocks in this channel. So, Vietnam we talked about. Look who's getting hit. Again, $200, $300 a month. These guys are going to have to come back. They're going to get hit with big tariffs. They're going to have to come back, and they should. Nike's a U.S. brand. Lululemon's a U.S. company. Adidas is German. I don't care about Abercrombie, U.S. Gap. They got to put stuff here. I'm sorry. I agree. I agree that these people have to stop paying $200 a month wages and start paying U.S. workers. I'm sorry. And Nike makes billions every year, so they maybe don't make one, maybe they don't make $5 billion, they may only make $4 billion. I'm not going to cry for Nike. I'm not. But what I'm going to do is, here's very interesting. Nike is at COVID lows, folks. I think I've talked about this before. I expect that any asset that hits a COVID low, and I think a lot of assets are going to hit COVID low before it's a buy. So I don't recommend a lot of things, but I think Nike is incredibly oversold. I don't know. I haven't looked at the fundamentals. I haven't looked at it, but I can tell you, to me, this is support. So if there's one stock, just based on where it's at, what the expectations are. So remember, what was COVID? The end of the world, right? The end of the world as we know it. Nike's now trading at the end of the world as we know it. Is Nike a good company? You tell me. You see it everywhere. Now, I think the management is terrible. It's part of the reason the stock is down here. They need to fire some people, which they're probably going to do. But COVID lows. Just take a look. My last chart has nothing to do with the stock market, but I think this news today that came out is, I would say, some of the most significant news, and it got overshadowed by the stock market getting crushed. SEC say stable coins aren't securities that require registration. Folks, this is a game changer for crypto, for Bitcoin and crypto. I don't like crypto. I think the meme coins are scams. Most crypto is a scam, but Bitcoin, Ethereum, these are legitimate assets. And when you throw in stable coin, stable coins, in my humble opinion, are going to be, let's say you look at the asset value, it's going to be there's going to be trillions of dollars in stable coin. The U.S. and the reason why the SEC is, the U.S. is going to float a stable coin, and there's a lot of positive reasons behind that. And one of the reasons is the U.S. has to sell a lot of bonds, and if they have a stable coin, there's a buyer for their bonds. Anyway, this is significant because a stable coin is the preamble for, think about it, a company decides they want to do some kind of alternative bond offering. They want to raise money not as an equity but as a bond. They're going to pay a set stable amount of interest. Today, the SEC technically would call that a security, but now I can make an argument that if I'm XYZ company and I want to do a 7-year or 10-year bond and I'm going to pay a fixed rate, stable rate, I'm going to say to the SEC, hey, pal, you said stable coins aren't securities. Well, why should I have to register this? This is a stable fixed income instrument, just like a stable coin. Anyway, don't know if that's going to happen, but I thought this was incredibly significant, but no one talked about it. So look, folks, it comes down to this. Volatility. They're talking, again, 10% in 2 days. That's COVID era. We got other interesting companies trading at COVID lows. We've got emerging markets looking like winners, metals and mining and commodities, not, again, non-dollar. The dollar is toast because this administration needs it to be weakened. That's how they're going to fix their situation. So look, if you like this video, please like. I'm getting no traction. I don't ask anyone, but just try to promote it. I want more people to understand what's really going on behind the scenes, because all you guys are getting is the garbage. People telling there's no recession, there's not this, the tariffs this, tariffs that. No, this is what really is going on, and you can't listen to Wall Street, CNBC. It's just a bunch of baloney. So, as usual, there's opportunities, but volatility is very high. So investors, be careful out there.